Hey everyone, welcome back to CryptoCache. Thank you very much for joining me here. Hoping a great day. Let's take one more look here at Bitcoin, see what's going on here. Just basically seeing a descending trend line reversal, or essentially just a resistance there. Just keep in mind, when you establish lower highs consistently, the likelihood of the price breaking down is greater. Just simple pattern formation. Quick congratulations to our community members here from some nice profits on our SEI short and our SUI short. So SUI and SEI both gave us some good profits there yesterday, but they were tight targets. As I mentioned, try not to get too super greedy right now, even though I do feel like we may see further downside for Bitcoin, which we do still have an open short with that coin. The truth is, these ranges are kind of staying tight. We're working within a range, and until those ranges are broken, we got to presume they're going to continue. So let's take a quick look here. This is Bitcoin starting to stack up, a lot of liquidation on both sides, but obviously the heaviest concentration is that low 107K range. I do personally still feel we're going to see 106 to 107K, but from a macro perspective, once more, as per usual, 111 to 112 is that close approximate of upper liquidation that's a lot more substantial. So we get close to 110 again, I think we're probably due to see a candle wake up and back down, or at maybe even a breakout and a continuation. It's too early to tell though, but we are maintaining this range quite well. Bitcoin is super strong in the 107, 108K area. It's really interesting to see how that works, just based on there's some fundamental news, price comes down and then it comes right back up. So be very careful of shorting. If you're going to short, just make sure you watch it close and don't get, don't try to short to the 90K range. I think that's almost a thing of the past for the moment. All that being said, liquidation delta is jumping up and down between longs and shorts controlling the market. So right now we're kind of at this break-even equilibrium. I don't really love to trade these conditions here. Personally, I kind of just wait for a definitive direction to be established. So we got a lot of conflicting information, at least on the back end. We'll double check the charts to see, but open interest heavy at 110, and then of course we got 108 and 105 respectively. So those are kind of like the heavy areas of concentration where people are averaged in the most. When we look at the last 7 days worth of trading here, ever since we've been in this range, we can see our point of control is still at 107,000. Sorry, 107.6. So that's kind of the rough estimate there. So we see the most amount of average positions in the last, 2 weeks worth of trading. Ever since we've been at 105K or higher, we can see that is kind of the case. Now we zoom out, it tells us a different story. If I'm not mistaken, it's 104. 104.5, round number 105,000. So again, if we lose 107K, I think 104 to 105 is the next solid area of support. Yeah, that's kind of the concept there. We do still have a fair value gap as low as 103, and once more liquidation also kind of reflecting 103K has a concentration of liquidation there. So worst case 103, better case we bounce from here and keep going higher. Really simple way to understand it. Either way you look at it here, stochastic swinging down for the second time, MACD is soon to diverge. We're above 50 in the RSI, a lot of conflicting factors. There's nothing here that's definitive telling us it's going to go either direction. If other people are trying to convince you of that, I think that's a problem based on the simple fact that we have too many conflicting factors. The best thing to do is not trade. While the market lately has been giving us a lot of false positives, it's better to be safer than sorry than to try to force a trade right now, because if you have a hidden bullish divergence or some kind of magical indicator on the charts, you're going to probably see that across YouTube, of course, with thumbnails, etc., of just these total idiots that don't even know what the hell they're doing, and they look like them too. Mainly, I'm not discrediting anybody else. Don't get me wrong. I'm sure there's still some good analysts out there, but for the most part, we have some funny posts in our community about just how ridiculous people are with these magical indicators. Anyways, the whole point of me mentioning that is that 4-hour time frames also conflicting. We're kind of hanging out here right at 50 in the RSI, but stochastic swinging up saying we're looking good, but MACD's diverging saying we're not looking so great. So these are all just confusing times, right? So the simple way to understand it to me is that with us being kind of right here at the all moving averages, the price is starting to compress. We're starting to work ourselves into a range. I mean, you could argue that this is like a bullish type of pennant pattern, right? But the truth is, until it breaks or actually picks a side, we don't really know what's going to happen just yet. My consensus as of yesterday is that we're probably going to go down. We have slightly more contributing factors to the downside, and it would make sense for this lower liquidation to get hit first before the upper liquidation, just based on the simple fact that we have a lot of longs heavy in the 106 to 107K range for their liquidation events and different stop losses there. So I don't know. I personally think we're going to go down a little bit here. So either way, I'll post the payout chart on our Twitter, Telegram, and Discord as per usual. It looks a little something like this if you're not familiar.